Welcome you all on behalf of Pata University. I am Dr. Deep Rahim, your course instructor for financial markets, and we will study this chapter in investment portfolio analysis. Starting with financial market, what are financial market? Financial markets are those markets in which financial instruments are traded. Means financial instruments are bought and sold. Now, what are financial instruments which are traded in financial markets? Are like you can say uh, cash, currency, coins, price bonds, cash bonds, coupon bonds, infinity bonds, debenture, shares, stock, etc. These are the financial instruments which are traded. The most important thing which you have to remember in financial market is the life. Life of an instrument is less than 365 days. Sometimes the currency life or the shares lives are from seconds to minutes, mostly to days. But if you talk about those which involve those financial instruments which are traded slowly, like price bonds or coupon bonds or other bonds or debenture or any other financial instrument, they take sometimes months. Like treasury bills, the life of treasury bill is maximum 6 months. And what are treasury bills? Bills which are treasury bills are those bills which are government issue when they are in need of money. Then we talk about last lecture. We talk about corporate bonds. What are corporate bonds? When the private company is in need of money, they issue corporate bonds to the public to raise the funds and to acquire the funds. So these are was the discussion on financial markets. The market in which financial instruments are traded is known as financial market. Now, what are the types of that? The first type is primary market. What is primary market? Primary market is the market that involves issues of new security in the market and for the first time which is offered to the investor. Like for example, a new company has started his business and the company start its trading of the shares on the first for the first time on any stock exchange platform is known as primary market. So the important point in private market is basically its capital formation market. A first time the company create any product or service and then the product services company launch its shares to the public, offer its shares to the public for getting the money for acquiring the funds and for doing investment of the people in that company. That market is known as primary market. Clear? Should we move ahead? Then secondary market. What is secondary market? Market that involve buyer and seller of existing securities. These are basically those markets which existing buyer and seller are already trading. Existing companies are already trading. Like if I talk about Nestle, Apple, Samsung, HP, uh, IBM, they are already trading and already doing financial trading in stock markets. That market is known as secondary market, and this already existing companies are trading. Now, what the difference between primary and secondary market? In primary market, new companies with new product and service offer their shares to the public, but in secondary market, already old companies are selling their share again and again. And I give you example of old companies like Pepsi, Coca-Cola, Apple, Toyota, Samsung, XYZ company. They are trading for the second time. They are selling the shares for the second time or buying the share for the second time. Funds flow from buyer to seller. Buyer become the new owner of the security and no capital formation occurs. In this stage, no capital formation is occurring. Why? Because you are selling very fastly. In mostly in this market, there is a third party person who is earning more money, and that is broker. What he is doing, he is offering the buyer that you can sell the shares at higher cost, and he or she offer commission to that, and they agree to sell their shares, and they are agreeing to buyers to buy those shares from those persons, and they are charging commission on both sides, from the buyer and from the seller. So extra making money or extra money goes to the pocket of third party who is broker or agent or brokerage firm who is making a deal between buyer and seller in secondary market. And you have seen, I have shown you the example of ksc.com.tk last lecture where we were watching the green arrows moving ahead and red arrows moving down. Green arrows were showing that the share prices are going up and red arrows are showing that the share prices are going down. So need to judge, you need to see that in secondary market share sales is done very fast. Every 5 minutes, buying and selling is done. Every 5 minutes, the price of the share is changing, increasing or decreasing. And the day end from 9 to 5, at 5 p.m. you get to know about secondary market price of your share. So that market is known as secondary market. Clear difference between the primary and secondary market is clear? Okay. Moving ahead to the next slide, that is third market. Third market is the market, the trading of securities that are listed on organized exchange in an over-the-counter market. The market which we can say the financial market instruments have created. It's not a proper organized market. It's not over-the-counter market. You can say that it's over-the-counter market, or you can say remote market or online market. But it has been created by the third party. And who is the third party? It's a broker, it's an agent, it's a brokerage firm, it's a bank, it's a mutual fund. All those financial institutions or financial managers who are dealing in making the buyer and seller meet, and frankly speaking, third party is earning enormous profit in third month. Why? Because we mostly have no time for such things. For example, if I say I am a university professor and I want to sell my mobile phone, I don't have time to go to the market and sell my phone. What I will do, either I will approach a agent or a broker or a dealer to sell mobile phone for me, and he will definitely charge commission from me as well as to whom he is selling that mobile phone. So both parties will getting, and by the end of the day, he's just using his skill, or she is just using his skill, the broker, but he is getting or she is getting commission. I can give you example of the property sector. What property dealer do? Property dealer buy plot from your owner and sell it to the seller, or seller, and what he's charging is charging commission on both sides. He's taking commission from the buyer, he's taking commission from the seller, and both commission, and he's just using the skills or his office, not any financial things which he's using, but he's charging both of parties, and sometimes they are charged their own commission separately than the both parties. For example, if they buy a third party agent buy a plot at 5 lakh rupees from Wahid and sell the plot to Rehan at 6 lakh rupees, and found that your plot is sold at 5, the 1 lakh difference amount is separately going to the pocket of third party person, that is agent, and plus not only this commission. For example, if he's buying a plot for Wahid at 5 lakh, 1% commission means 5,000 rupees he will be charging from Wahid, and if he's selling the plot to the Rehan at 6 lakh rupees, for example, 6,000 commission from 11,000 this money, and that 1 lakh profit, 1 lakh 11,000 straight away going to the third party owner without any efforts, without any investment even, just using skill. So that's why I say third party, third market persons or agent or workers, or you can say broker, are earning more money than primary secondary market. Clear? Going towards the fourth market, trading of security directly between investors, usually between two large institutions without involvement of broker or dealer. That is a market which we people prefer, because we are, you can say, we are poor by nature with third world countries like Pakistan, India, China, Indonesia, Malaysia. We are poor in financial terms, you can say. So we try to delete, to escape from the third party and secondary market as well. And same from the primary. And we go to the fourth market. What is the fourth market? Where buyer is meeting, where seller and seller is meeting. This weekend I received a call from one of my friend who's working in some type of call center, and they need boys and girls with fluent English language skills, with any graduate degree, and they're offering 1 lakh and 1,50,000 per month salary. I asked, what are people are doing? They said, we just connect buyer to buyer. For example, if I am in need of printers and I need cheap printer, I will ask the company to engage a supplier in China, engage a supplier in US, engage a supplier in Russia, engage a supplier in Ukraine, and they will engage. The company will be charging commission from me, but they will give me international contact. There is no broker in that. There is no agent in that. Even I can directly do. You people are hearing nowadays that people are importing Japanese vehicle on their own, without involving custom, without involving any excise department, without involving even, you can say, the bargain agent. Why? Because to reduce commission to zero commission, and that is known as B2B, business to business contracts, or C2C, customer to customer contract, or B2C, business to customer contract. What is dropshipping? I will quote here example of dropshipping. You search, market, hunt You search for the good BSR, you choose the product, and then after supply the product, you order that on Alibaba, on China, and China will supply the product directly to the US or whichever market which you want to. And you are just getting the commission of the agent. Then you say they are blocking our account. You are doing something that is not up to the mark. Plus, they are not blocking account, blocking your country is blocking account because Pakistan government is getting nothing. If you do drop shipping and give the tax on that to the Pakistan government, you will never reply. Agree? So fourth market is direct B2B, business to business, or business to B2C, business to customer, or C2B, customer to business contact. Clear? Now moving ahead with types of secondary market. As I told you that secondary market is the largest market of financial market. And when I talk about the largest market, which means the market which will shake your country economy. I told you we at 9:30 p.m. we are watching news in Pakistan and we see आज कराची स्टॉक एक्सचेंज इतने पॉइंट्स गिर गया, आज कराची स्टॉक एक्सचेंज इतने पॉइंट्स चढ़ गया. ये गिरना और चढ़ना जो हम कराची स्टॉक एक्सचेंज में कहते हैं, ये बेसिकली हम स्टॉक एक्सचेंज मार्केट से आपकी पाकिस्तानी इकोनॉमी जज की जाए. एंड दैट वे वी जज योर पाकिस्तानी इकोनॉमी. And for your kind of information, Pakistan Stock Exchange is at its highest in the history. 80,242 it's hit stock exchange. जबकि लास्ट ईयर इसी वक्त में इसी दिनों में 44-43,000 भी नहीं पहुंचता था. मैंने अपने स्टूडेंट्स को लास्ट ईयर कहा था आपने पाकिस्तान स्टॉक एक्सचेंज इन्वेस्टमेंट करनी है, दिसंबर में कर दें, जून में निकाली. दिसंबर में 33,000, 34,000, 38,000 का था. जून में जब निकाली 44,000 था. कुछ स्टूडेंट्स जो मेरे हैं उन्होंने जून में मुझे सर इन्वेस्टमेंट करें, कब निकाले? मैंने इन्वेस्टमेंट करें 44,000, 43,000 चल रहा था. मैंने कहा आप 31 दिसंबर को 85,000 निकालेंगे, 80 प्लस निकालेंगे. आज आप देख लें 80,242, 80,242 KC and index have touched. It's at peak. Same goes for New York Stock Exchange. Same goes for London Stock Exchange. Same goes for other foreign country stock exchanges as well. So if stock exchanges are hitting high, it means they are running the economy. Why? Because common stockholder is there. Preferred stockholder is there. आपका जो मेजर इन्वेस्टर है उधर बैठा है, चाहे वो आपका कॉमन स्टॉक होल्डर इंडिविजुअल है हमारी जैसा, या वो आपका प्रेफर्ड स्टॉक होल्डर दैट इज इंस्टीट्यूशंस लाइक बैंक्स, लाइक इंश्योरेंस कंपनीज, लाइक अदर फाइनेंशियल इंस्टीट्यूशंस, दे आर डूइंग इन्वेस्टमेंट. आपका 90% जो बड़ा इन्वेस्टर है स्टॉक मार्केट में बैठा. क्यों बैठा? Why they are sitting in stock market? Why not in any other sector? Because the return is very fast, although the loss is high, but the basic business formula apply here. High risk, high return. Stock investor take high risk, putting all the investment, and they encash that investment in terms of profit. I have given you assignment of doing 5 lakh rupees portfolio, create a portfolio of 5 lakh rupees. Believe me, when you will do it and you will start presenting me, you will check, you can get 180% of profit from your portfolio even a year. 180% is a hell of amount. For example, if you are doing amount in millions and trillions and billions, and if you are getting 180%, if properly managed, if properly portfolio management is done, if properly 5 steps are applied, if properly financial market is evaluated, if properly technical and fundamental analysis is done, you can get 180% of that. I know people, even Metaphor and Access apps, who invested 70,000 Pak rupee. I don't know how much it equal to in the dollars. And now I met them. They have the portfolio of 7 lakh, 6 lakh 80, 5 lakh. Although what do you think? They did not have face loss. They have face loss, but they have earned. I told you, if at the day 500 times price change and 400 times the price is up and 100 times the price is down, it means stock exchange will go up. But if at 500 times price is changed a day and 300 times your price is low and 200 times price is high, it means the stock exchange will drop. That. These are the things which they have done in secondary market. And this is example of exchange or auction market. Now, coming to the bookish definition of exchange or auction market. Secondary market that involve bidding process that take place in specific location. For example, Karachi Stock Exchange, New York Stock Exchange. At specific location that is known as exchange or auction markets, the secondary place is like Stock Exchange, Pakistan Stock Exchange, Then we can say London Stock Exchange, New York Stock Exchange, Beijing Stock Exchange, Delhi Stock Exchange, Bombay Stock Exchange. These are a physical existing site. And then the dealer over the counter market. Secondary market that do not have physical location consist of network of dealers who trade directly with one another is known as dealer over the counter market. For example, the bond market. You have seen bond market. If you go to the Chowk Bazaar in Peshawar or in Gold Bazaar in Peshawar, you can find every second shop of price bonds. Why? Because they don't have any physical office or physical location where these are traded like Pakistan Stock Exchange. So that market, which is unofficial market, which is not properly officially declared market or official place or office of any company or office of trading, like stock exchange, is known as over-the-counter market. And mostly it's run online. Mostly it's run through app. Mostly it's run through mobile or through other network basis. So that is known as dealer or over-the-counter market, which don't have physical location. And even I give example of Nasdaq. Go to Nasdaq office in US. There is no person working there. Only screens are there, and you can sit. You can watch your trading. You can make deals. You can buy and sell trades of shares. But there is no person. You have to do it on your own. So that is also I can see over the counter market which don't have physical location operation, but online operation as well. Clear? That's all for today uh, in financial markets. Now we'll move towards money market. What is money market? Money market is a market in money instruments are traded. And what are money instruments? Cash instruments like Pak rupee, euro, pound, dirham, real, XYZ. And that market has very small life, very short life. How? Short-term security and maturity of 1 year or less are traded in money market. Networks of dealers operate in this market, and this market is mostly followed by uh, all over the world countries. Now you must be thinking, sir, you were quoting about the stock market, you were quoting about the secondary market, fourth market, and all the market. Why you are focusing more on money market now? I am focusing more, I am highlighting more money market because money market is the easy way of trade. Everyone wants cash dealing. Everyone wants dealing in cash in front of the customer and you can say the business to business as well and customer to customer as well because that is most trustworthy instrument. If I give you uh, bonds of 40 lakh, maybe you are not happy to have those bonds in payment. But if I give you cash, if I give you dollars, if I give you Pak rupee, you are happy to get that in space of that bond. Why? Because of liquidity. Cash or foreign currency can equally convert to the liquid form, but the bonds cannot be converted to liquid form easily. They took time. They have to go. So these market, money market, which has life of 1 year or less, short-term security, which has life of 1 year or less, is known as money market, and they are traded all over the world. They use phone computer to make trade rapids among themselves and with the issuing organization. Mostly dealing in money market is done through online. Like if you sit and check the price of dollars today, in seconds you will get it on Google. When then you want to check the price in market, open market, you can check it on Google. Hardly a rupee or two difference will be seen if you go physical market than to online market. But most of these people do online trading. That is known as money market, whose life is less and whose short-term securities are sold and bought. Clear? Then moving ahead, we have securities traded in money market include treasury bills, negotiable certificate of deposit, commercial papers, and short-term debt instruments. What are included in that? Treasury bills are first of all included in that. That is government is when need of money they issue treasury bills to the financial rich investor like business tycoon or business organization. If an organization investment in treasury bank, treasury bills, they are you can say favoring the government. For example, business tycoon will do like Malik Riaz in Pakistan, Jawed Afridi in Pakistan, uh, Mia Mansha in Pakistan, XYZ. But if any company is doing, then banks, MCB Bank, Habib Bank, National Bank, insurance companies, State Life Insurance, XYZ will be doing that. Clear? That is known as treasury bills.